All right, everyone, why don't we get started? This is the Assembly Budget and Finance Committee meeting of the whole. Today is Thursday, February 15th. We are noticed from 12:10 to 1:10 p.m. in City Hall 155. So thanks, folks, for being here. I see we have some members in the room, some folks on the phone. So we'll go through introductions and then we'll move into our business. So let's start with introductions in the room, starting with Mr. Martinez.
George Martinez.
Kevin Cross.
Zach Johnson.
Anna Brawley.
Cameron Perez-Rodillo.
And on the phone, we have Mr. Solt.
Randy Solt here.
And Mr. Rivera.
Present.
And anyone else on the phone? Okay, I think that's it for members. We are also joined by folks from the administration. We have our CFO, OMB director, treasury director, and then some folks in the back from the administration, as well as our legislative services staff. So why don't we get started then? First, we have our update from the Budget Advisory Commission, and I understand we have our chair, Mr. Clauda.
Yes, thank you, Madam Chair. This is Nolan Clauda, and I'm chair of the Budget Advisory Commission. Give you guys a quick update. Our last meeting was held on February 8th last week and reached quorum. I was actually absent for the meeting, but I have brought myself up to speed and watched the whole video of the meeting, and so I'm able to give an update as to what took place there. The meeting was focused on an update from ASD because of the school district budget cycle being a pressing issue. So Kelly Lessons from the school board and Andy Ratliff from the school district CFO gave a really good overview of what the drivers of the budget are and why there's a $98 million projected deficit, what it means for the school district. And so of course the bottom line with it is that there's going to be reduced personnel, larger classroom sizes, and an overall reduction in what the school district is able to provide for students. And so certainly I'm somebody who, as a parent, I'm pretty concerned about. But a highlight of what some of the members, we did not take any action on a resolution, and the commission hasn't spoken with one voice on the subject of the school district and what our thoughts are on it. But the questions from some of the members that were asked during the meeting of Mr. Ratliff and Ms. Lessons were, knowing there are a lot of questions trying to get at, what ASD has done to save money over the years. What are some of the things that are driving it? Of course, there isn't a lot of low-hanging fruit that can simply be cut. And these aren't necessarily new problems either. These are problems that have been understood for a long time, that the school district has been concerned about for a long time. Some of the members one member in particular was really interested in what the move of sixth graders to middle school has as far as implications, and also there were some questions about how the ASD budget, impacts property taxes. Why when the state funding goes less far, muni property taxes or local property taxes for ASD, continue to go up, even though there's a deficit, and the kind of challenges that creates. And also a lot of members that were kind of still new to understanding the mechanics of how the school district budget is determined and the formulas behind it. So those were some of the big issues. We also heard from Ross Risvold from Muni Finance, and we were interested. We had requested that he come because we were interested in understanding a little bit more about the Muni bond rating and how things like the school district budget reserve, being drawn down, how that might impact bond ratings, and so some questions around that and the factors that have determined some of the recent downgradings of the Muni from S&P and from Fitch. So good questions and discussion there. We plan to, for our next meeting, have a department meeting with maintenance and operations in March. That's what we'd like to do as far as understanding, M&O and their some of their budgetary drivers and how the snow situation has impacted things, and so forth. So down the road, we're also interested in looking at the Choose Anchorage sales tax proposal, and we have some other topics of interest that we haven't nailed down exactly when. But there's ongoing interest, though, in looking at departmental budgets as a commission. But I will hand things back to you, Madam Chair.
Thank you very much. Any questions for Nolan? Okay, not seeing any. Thanks so much for your report and for your service, and please pass that along to the commissioners.
Thank you.
Okay, next we will move into our first of many updates from our CFO. So go ahead, Mr. Thurn, with the MOA Trust Fund Board update.
Thank you, Madam Chair. The Trust Board hasn't met since the last meeting. I think our next meeting is March 14th. We have been doing a lot of additional work with them on questions that they've had on different things. They are working aggressively to try to make the trust a separate unit and managed appropriately. So we are facilitating that backup and having some answering some of their additional questions. I think the next update that we have next month, we can kind of give a pretty good idea what some of the ideas that came out of that particular meeting. They are working, I believe, on a budget. There is a budget that is presented. If you remember, Dan Moore used to present that in the first quarter-ish of the year. Which basically has a lot of the fees that we pay of the different financial advisors and so forth. But I anticipate we'll be looking at that budget, and there will be a document that'll come forward to the Assembly expressing that probably shortly thereafter. So that's kind of the update currently on the Trust Board. Would you like, if there are any questions? If not, I'll be more than happy to move on to the next topic.
Okay, yeah, I think we'll just, we'll pause with each item and see if there's questions, but otherwise that we can move on. Is there any questions on the Trust Fund Board? Okay, not seeing any, so let's move on to FEMA reimbursement.
COVID FEMA reimbursement. You have the new sheet there in front of you. 3 payments from the state came in for about 1.7 million. What that leaves is 1 outstanding management category Z project for about 240,000. That paperwork is all the way through, just running through the normal approval process that they have at the state. And I would hope that we would get that money maybe by the end of the month, which then means that we would have received in our accounts everything that was reimbursable by either FEMA or the state at that point in time. I did revise the spreadsheet a little bit on the bottom there, and I basically come up with a delta here because I know that's a topic of discussion, which is the amount between what we received back through all of our reimbursements and what the current total cost of the expenditures that are residing in the COVID funds are. I used to break it down on where that came from, but I just wanted to get a specific number here. So that number, hopefully won't change too much going forward. I will say that, I was looking to try to close COVID down here in the near future so I can get out of the COVID FEMA business because it's been way too long. The EOC did come to me last week. They are seeing that we still have some money available in the original appropriation by the Assembly, and we have a reimbursable amount, many millions still left in our Cat Z administrative. They would like to hire the contractor that they have on task order to do kind of a emergency closeout rather than a project closeout, where maybe they could look at some items and make sure that should we get formally audited in the future, maybe we'd be better prepared than our rushing that we've been doing with our limited staffs over the last couple of years. I'm supportive of that, given some criteria that I went over and I met with them. So there is a possibility here that another 230,000 we might spend. I tried to cap it at the end of March, that they had to kind of do the work between now and then. So our costs, this is where I was hoping everything would end up at. There might be a situation here where they're gonna do this contract work over the next 4 to 6 weeks. It is reimbursable. And we have definitely the Cat Z space available to be able to do that. What that means is that delta there shouldn't change, because whatever we spend, I should be able to get reimbursed for it on a dollar for dollar basis. I'm trying to get that number as locked in as possible, because if you remember in the EOs that you wrote, it was a requirement that the taxpayers had to reimburse the fund balance for whatever we couldn't get reimbursed. And given we have first quarter budget revisions coming up, and well as setting the mill rates and so forth, if that is something that the Assembly wants to do, I feel real strong pressure to try to get that number as defined and finalized at that point in time. If you decided not to, our next opportunity would be a year from then to be able to do that. It's kind of like a one-time, 1-year mill rate type thing. So I've really been focusing on trying to do that and not have a lot of other things out there. But now this other thing came up, and which might change the numbers, but I do think that it will get fully reimbursed for it. So I'm not too concerned about that number changing, but I am trying to really lock that number in so that the assembly and the administration can take that into consideration when they're making decisions on whether they want to seek this one-time amount and trying to lock that number in. So anyway, that's where that is. But right now we've got that one payment that's supposed to be coming. If we move forward with this other one, it might continue the work on FEMA COVID for a few months longer than I would have liked to, but it's probably beneficial to have something like that. I will tell you, I am being and have been since the first part of December audited by FEMA National, and they are taking a look at things vastly different than all the FEMA Region 10 and all the state did, and I'm having some significant needs of trying to go back and find additional documentation to justify this. So it's probably not a bad idea to have a company come in and help us do that. But I'm in the middle of one of the projects right now where the data or the backup documentation that we've provided has not been sufficient for this person who's FEMA auditor, and so I am struggling a little bit. But anyway, so those are kind of all of the different things that are going on with FEMA COVID. We are really getting close to the end here, and I've told everybody I'm getting out of the FEMA COVID business as quickly as possible. I have also stopped any Muni employees from charging to these funds in an effort to once again eliminate any things, and we have had some accidents where people are charging to it. So I have locked that down as well. So I'm not expecting these expenditure numbers to change going forward, except for this recently thought about project that might be done at that point. So I'll answer any questions on COVID that you may have.
Yeah, I'll start with a couple questions and I'll see if other members have questions. And thank you for pointing out that was one question, was at what point do we stop charging for this, knowing that there is an ongoing time cost to work on this. So thank you for clarifying that. And also say too, on the topic of what to do with that remaining things we can't reimburse, that my co-chair and I, Meg Zalatel, are talking about that. So we will, that's on our radar. We're thinking about it for first quarter. Two questions on that point. Given that what is not being reimbursed is essentially staff time that I know was charged to this, and in a perfect world would not have been charged to this in the first place. How does that interact with the idea that we would pay for this separately out of fund balance, given that it's essentially staff that we already pay? Can you kind of explain that a little better?
Well, I mean, I guess just interpretation of what the language was that you wrote. All of this was taken out of fund balance, which we're trying to get back to zero as much as we can. You are correct. Only about 180,000 of that amount, if we go back to the numbers when I used to break it down, was actually items where we spent on COVID that FEMA determined to be non-reimbursable. The significant portion of that was municipal staff that were ineligible and should have been moved back into those budgets at the time of the years that they happened. If the assembly chose not to go seek reimbursement for the municipal labor, I mean, what ended up happening is either those departments took that extra budget and spent it already on computers or whatever they had because they thought they had more funds in that particular year, or we had a situation where that labor then was used. They got the benefit of it during that year, where the cost for those people were maybe doing some FEMA and some regular jobs, so they got other work done on that particular year. My goal would be to get fully reimbursed to the fund balance. As you know, we need to get our 10 and 2 and keep those numbers here, as well as. But I understand the dilemma here is that $1 million of that is labor time that we would have moved back into those budgets, but they spent it most likely on something else. And if they didn't spend it on something else, then that money that extra non-used labor got automatically rolled into our fund balance on each of those years because they were not filled expenditures at that point in time.
Yeah, thank you. And I'll just say too, I think the planning, the kind of after action planning is a good idea. So I think that was worth pursuing with EOC. Other members, do you guys have questions? Oh, go ahead, Mr. Brexford. Yeah.
Yeah, just a couple of questions. Do you have a percentage at this point overall of what we've recovered based on what we could recover? Is there an overall percentage that you can give us?
I'd have to, I mean, we could do it on the calculator, whatever 125.6 divided by 126.8. So it's over 99%.
Yeah.
It's got to be, it's pretty significant.
Yeah. So, and that's kind of before we move past COVID. Before this, I'm trying to get a sense of. I'm trying to reconcile. Is this unprecedented? Because I have these very strong memories a few years back being told that this is impossible and that you could never recover funds like this before, and spending a lot of energy hearing from the administration that this was not something that we should expect. And so I'm just trying to get a sense as we move forward and set this back and what are the lessons learned? Is this something that is unprecedented, or was it based on the heroic efforts of you and others, or how do you reconcile, I guess, what we did compared to what we heard?
Boy, that's a very good question, Mr. Perez-Urdia. I will tell you that there were some decisions made by FEMA Region 10 in some of our big categories where they made a decision. I think they were trying to get to yes, that other regions of FEMA did not get those same decision things, and that ended up helping us. I was very concerned about some of our expenditures through the course of this entire thing, just based upon what I was hearing with other cities and municipalities where they were not getting the reimbursement for very similar activities that we were doing. And I'm always fearful, and I hate putting this on record, but I am always fearful that now that I'm starting to deal with national FEMA auditors versus our regions, and, you know, on some of the ones we're doing right now, I've gotten the money, but now they're asking for more proof than we ever had to prove before. And, you know, are we able to ultimately meet that level? And do they start requesting some of the money back because some auditor at Washington, D.C. thinks that we don't have it, even though all these other people did? So I think we did fantastic. The team did really well. We worked really, I mean, this is 3.5 years of my life here. We worked really hard to be able to get this back. There were some decisions that FEMA Region 10 did that were tens of millions of dollars into our favor. And I'm always hoping that those decisions continue to stand the test of time and validity. You know, at this point, we have the money, and I think we would hold on to that money till the bitter end. And if we had to do some lawsuits, we'd probably go down that particular avenue as well. But I think it was a combination. And I don't think that at any point in time when the administration was putting, here's what we believe the challenges are or what the concerns are, that was based upon the information at that point. And as time progressed and as we continue to advocate for our positions and for the expenditures there, we were ultimately highly successful in getting those questionable things, which really shrunk that potential gap into a very small number.
Thanks. And I would just, both, I think I would just say it's both. I think that you, the work that you did and your team did is amazing. And I want to congratulate you for it. And I don't mean to undermine that at all. I do think lessons learned moving forward, it's helpful to know that it's possible and that because as much as I appreciate the caution that was given, it was done in a way that made it seem like that we were spending in a not responsible way, and I think now it's been proven out that was done in a responsible way, and we've recovered those funds as we were supposed to, and so I think moving forward, it's a good lesson learned for us to know that it's possible for us to actually recover the funds that we spend in these kinds of circumstances. Thank you.
Thank you, Mr. Cross.
Yeah, probably more of a philosophical difference because we are paying for those funds. I mean, it may not be directly, but rapid inflation is a direct cause of massive government spending. I think that's important to recognize. And I think some of the arguments that you heard, because I was one of those individuals, which is you realize there's no such thing as free money. Like, it's going to show up somehow. And with over 500 billion in fraud, that's what the federal government reported on the FEMA. I mean, we're all as taxpayers paying for those expenses. So going through this, you might say you dodged a bullet. We might have run into a train, might jumped out of a bullet into front of a train. Now you try to jump out of that one. But I think whenever we're talking about billions of dollars or trillions of dollars of federal spending, rather than look at it like a cash cow, we should always be extremely responsible and cautious. Thank you.
Thank you.
If
Go
I
ahead,
could
Mr.
have
Stein.
one more comment, because I feel obligated to do this. Now you brought free money. I mean, we got $500 million of free money, and ARPA, CARES, FEMA. I know you all like free money and you like to bring it in, but please do not forget the departments and you see our financials where we're not ready, we're not done yet. When we have departments that either collapse or are expected to audit and keep track of all these things, the burden that has been put on the municipal staffs to administer all this free money, so to speak, has been a very big challenge and is rooted in some of the reasons why we're late in some of our things. And I'm just going to bring up ARPA since I know that's next. If you gave $103 million to three vendors, we would have had three things to manage. But no, you gave it to 200 and some, and each one of those, no matter how, requires the same amount of effort. And I want to stick up for my staffs here as we go through here. You need to understand the complexity, and every one of those has to be tracked and managed and reported on and entered to the same amount, whether you gave them 7,000 or 4 million. And the same thing here with there were 12,000 transactions in COVID. That doesn't even include the labor. That's just actual invoices and credit card purchases that were done. And all of the municipal staff that had to do all of this work, not all of it was reimbursed, but all of it had to be tracked and reported on. And just as you're looking at making decisions going forward, it did have all of this money that came in that helped all these great things really put a huge burden on many municipal departments that I'm still dealing with today because of how much volume and accuracy that's required in the accounting of those things.
Yeah, thanks, Mr. Thurn. I'll just briefly comment, and then Mr. Martinez. I think this is a good example, and alcohol tax has been a good example too of the sometimes the disconnect between appropriation and administration. And as you said, there's a burden that goes with that, and also an obligation to execute what we appropriate. So it is a challenge. Go ahead, Mr. Martinez.
Thank you. I wanted to offer a philosophical perspective as well. And there isn't a thing called free money. Anytime you're dealing with structures and institutions, there's always a cost of business. It's just what it is. And so maybe that's a misnomer that we say free money. It's tremendously discounted with respect to being able to receive and distribute it, because it's basically at cost almost. So not free. But philosophically, the choice to distribute widely federal relief funds through this body during a time of a pandemic and an economic meltdown was the philosophical choice to have that much work spread out across all the distribution points. And so I just wanted to be clear that the choices that the Assembly made in the past weren't willy-nilly. They were done to philosophically distribute as much of those federal discounted dollars as possible across the community and the municipality of Anchorage. So was the work underestimated? Potentially. And I think people can learn from that, but there wasn't a pandemic prior to that. And so we hadn't had money at that scale come through in that short period of time. So I think everyone learned. I think the lessons to walk away with are, with respect to Mr. Alden, Mr. Thurn, just remembering that there's always a cost just because the work is still something that has a value attached to it. But just to remind the public that we were doing unprecedented amount of work meeting an unprecedented amount of need. Thank you.
Okay, any other questions? Okay, not seeing any. Then we will move past philosophy and back to our numbers, and I will invite Trista up to speak on the ARPA grant distribution funding update, and then I'll note there's a packet of summary report here.
Hello, everyone. So last month, whenever we met, the Assembly had asked to provide the expenditure reports. So the last expenditure report, they're due quarterly, as I mentioned last month. The last one was due January 31st. After submitting that report that we submit to the Treasury, to the Assembly, it's a 200+ page document, and it's very long, for lack of a better word. So a couple of members had written back and asked some questions about if we can simplify the document, and that's what you're looking at on the screen today, and also copies. So the spreadsheet we're looking at has information for all subrecipients, which is all external. I'm currently working with the Finance Department to gather the information on spent and unspent funds for all internal Municipality of Anchorage appropriations. Once that's complete, I will bring that to this meeting and share. To clarify a couple of the concerns that I received from the Assembly. So this report is the report the quarterly expenditure reports. This report is speaking from the perspective of the Municipality of Anchorage, which is the actual recipient of ARPA funds. All subrecipients list the same total budget, total obligated, and total expense because all have been paid from the Municipality of Anchorage. The Municipality of Anchorage has budgeted, obligated, and paid all subrecipients in full for their projects. With that, each subrecipient has until December 31st, 2026 to spend their funds in accordance with their grant agreement, which matches the Assembly appropriations. And I hope that answers your questions. Great. The section on status is information the Municipality of Anchorage receives from each subrecipient and classifies the existing status of external projects. This is the direct question from the Treasury on the quarterly reports. So the status update is the Municipality of Anchorage reporting on the individual subrecipients they chose, we as a municipality and you as chose to receive funding and where they're at in terms of their project. The Treasury does not ask specific amounts of funds spent. They only ask these 3 categories: if they're complete, less than 50% complete, and more than 50% complete. The Municipality of Anchorage at this time follows the federal guidelines put in place for ARPA reporting and asks the same questions of subrecipients. So if you have any questions, I'm happy to take them at this time.
Okay, thank you. Yeah, I'll look to members for questions, but in the meantime, I will ask, I see some have red text. Can you maybe explain what that signifies? I'm looking at, I think, page 3, and then there's some more on page 4, if you could just speak to that.
On page 3, are you speaking about the Anchorage Economic Development Corp?
Or just in generally, why are some of these in red? Was that a specific category? Is that still information that you're working out?
Sure. So per federal ARPA guidelines, anyone that received under $50,000 does not have to report on any type of funding received. So the ones that, I don't have a color printout, I apologize, but the ones that I can see right here that are outlined in red that have NA, Anchorage Economic Development Corp, 33,000 written in red. I'm assuming that's what you're speaking about. But if not, if you have further questions, please feel free to send them to me and I can.
Yeah, well, I guess I'll just read off of it. So there's
Sure.
Anchorage Economic Development for 33,000, Bike Anchorage for 80,000, ACDA for 100,000. So, and then Girdwood Fire and Rescue for 125, Downtown Partnership in 300. Those are all just listed in red font. So I was just wondering what the red was.
So the page that I can see with red font, those are all internal disbursements. So those are what I'm currently working on with the Grants Accounting Department to provide further information. So last that we spoke during this meeting, you guys had asked about encumbered funds. So it's currently a large undertaking. So I don't have that information at this time, but when I do have that, I will provide that.
Okay, thank you.
You're welcome.
Questions from other members? Go ahead, Mr. Perez-Valdea.
Thank you. Just remind us of the time frame when this has to be spent by the recipients.
All funding has to be spent by December 31st, 2026.
Okay, thank you.
And all funds have to be encumbered, which means obligated by the end of this year.
Okay, thank you.
You're welcome.
Okay, I don't see other questions. I guess I'll just ask, I appreciate this detail and also summarizing the detail. That's very helpful. And I know it takes time. I think one question that we'll have when you work through the internal pieces is whether those departments have reasonable expectation of utilizing that funding for what was appropriated, or if there's recommendations that they need. Because again, we want to make sure that we're fully encumbering all these funds by the 24, knowing that some of them may need to be reappropriated, but just that's really the ask. So I understand that will take time to do, but that's what we're hoping to see at a future meeting. So thank you.
You're welcome. And I'm currently working on that with all the internal departments. If they have a plan to spend those funds, what the plan is to spend them, their timeline, so that if they don't have plans to spend them by 2026, by the end of this year, they can be reappropriated.
Okay, thank you. Any other questions? Oh, go ahead, Cameron.
Just making sure I understand. In the status section, just making sure I understand what these different statuses mean. Completed versus 50% completed, not started. Can you go through and just explain what these statuses mean?
Sure. So on the quarterly expenditure reports, the Treasury asks specific questions on the status. So the status is what the subrecipient, which is external, the people that you chose to appropriate the funding to, how they report back to us. So if it's completed, it means their project is completed in full and they have spent all those funds. And they have reported back to us that their project is completed in full. And then so on. If they've completed 50% of their project, it means they've spent 50% of the funds, again, for 25%. And then not started means they've received the funding, but they have not yet started those projects.
Okay, great. And then in internal and NA, what would that mean?
That just means at this time, I do not have that information. Currently working on that with grant accounting.
Got it. I'm just making sure I have understanding of all the
Sure,
terms.
feel
Thank
free
you.
to ask.
Yep.
Yeah, go ahead, Mr. Johnson.
Yeah, so just to kind of follow up to what Mr. Presverdy asked here, just to make sure I'm understanding. So when you say, for example, you take one in status completed 50% or more, 50% or less, you're saying they have spent around 50, less or more of the funds they received. But in the spent column, it all matches the obligated funds. So the spent column, we're talking about the money that the municipality has granted to the organizations, right? So
Yes.
if these
municipality
numbers
has
match
spent
all the
that
money they
funding.
obligated, we've doled out to them, then the status is just how much they've spent of that internally, right? But they've received the funds from us.
Correct.
Yeah, okay, thanks.
It's kind of like two reports. So we're reporting as the actual recipient what we've spent our money on as a municipality. And then for those that external people that we've given the money to, they're reporting back to us and we're reporting on their behalf as a subrecipient. You're welcome.
Go ahead, Mr. Thorne.
So I actually do the quarterly report, so I have a little bit more information for you on that. All the money to subrecipients is out the door, so we report that as being completely gone. That's why the amounts are there. Those subrecipients then take and use that money for a variety of purposes. Our consultant contractor, who you're well aware of, Improves, is in constant contact with those subrecipients. That's part of his job. And every quarter, he has to get the KPIs and EBIs on each one of those things. And a part of it is what did you spend it on? Where are you at? How successful has the money been done? And those kind of things. So they then put that information, he puts that information into the portal, which is a part of that 200 and some page report that you get, and how they're doing that. The one exception, and I always want to go to exceptions because everybody thinks it's 100%. So anything less than $50,000, technically we don't have to list individually. And I picked this up and we've had some problems with combining projects. So I have gotten, I'm that over careful guy. So if it's under 50,000, I'm still creating it separately and making its own separate project. The problem is with that is that it's not supposed to, the treasury system wasn't set up that way. So we either have to be not started or completed because he's not gathering that information. So I would just take with a grain of salt those less than 50,000. That's because I'm doing it a certain way. With the limitations on the treasury software, they may indeed not have started yet, or they may actually be 100% completed. So if for some reason you get a question from an individual subrecipient who had an allocation or an obligated amount less than 50, and they're like, it says I haven't started and I'm 100% done, that's a technical thing of how we're managing the system. And I've tried to get to the contractor that at some point when they are completed, we'll change it from not started to completed, but there's no middle ground on those less than 50,000s that we can do. You have confidence in anything 50 and greater that they have to report, and he's getting that. And there are multiple, less than 50, greater than 50, but on the less than 50,000 allocated amounts or obligated amounts, we got two choices. We haven't started or we're completely done. And you may get calls. I don't know how you deal with the individual subrecipients who might call you. And if they question it, that's a limitation that I'm trying to manage to be accurate. So we didn't combine them in somebody else, but also then I have a system limitation on how we can do them. And there may be a bunch of them that say not started that really are completed in that category. But you are correct. If it's 50,000 or greater, that's how much they've used the money that they were given in that original allocation and where they are in the process.
Thanks.
Okay, thank you. Any other questions? Okay, well, thank you, Trista, for being here. Let's move on to our next item. So we will get our updates on the budget. So I will turn to Sharon Lechner, our acting OMB director.
Thank you, Madam Chair. So we have a handout, and the first page of the handout is our January 2024 budget to actual for expenditures for general fund. And this is only things that are extracted from our SAP system. So for instance, if a supplemental has not been entered into the system, it won't show in the column supplemental. Or if an expenditure has not yet been entered into the system, it won't show in this report. We were going to present an updated December report because you might recall that the December reports we saw at the last monthly meeting were missing a lot of IGCs, a lot of depreciation, but also, more importantly, they were missing about 5 days of payroll, because at the end of most years, you have a split payroll where some of the payroll straddles at the end of the year. We decided not to issue an updated December report because that split payroll has not yet been posted. And we're also missing still some depreciation in IGCs. As soon as the depreciation is posted, we'll give you a fresh December 2023 report. It will still miss things like depreciation in IGCs for a while, but it will give you a much clearer understanding of what 2023 will look like. But back to this report. This report, if you look on the very far right-hand corner, where it shows percentage of budget spent and encumbered on page 1, you get the impression that we're very much overspent at the end of January, because you see a 12% number in the bottom right-hand corner. And if you take January divided by 12, you would expect something lower than that figure. But it's a little bit misleading because it includes the impact of encumbrances, and they tend to hit the beginning of year really hot. So instead, if we took that 12% and took the encumbrances out and just looked at our actual routine spending, such as payroll, that 12% would drop to about 6%, which is a little bit more in line with what we'd expect to see. However, it's important to remind ourselves that if we look at some of these supplementals, between cold weather sheltering, which is item D, and the PAC elevator, which is item C, the combination of those two things have had the effect of taking our fund balance slightly below the 12% that we strive to maintain. So if we go to page 2, page 2 takes page 1 and it splits it out between labor and non-labor, so we can get a little bit more insight as to where our expenditures are falling. So on the left-hand side, we can see that labor is doing okay so far in total. We would expect to see about 7.7% labor posted through January. And if you look at the bottom as a whole, we're about 7% spent. So far, we feel through January that labor's doing okay as a whole. If we look on the right-hand side of the sheet, which is non-labor, things get a little bit more interesting, because if we look at the bottom right-hand corner, you can see the total spend is 18% versus us being 8.5% through the calendar year at the end of January. And so here is where we want to focus our intellectual energy. But again, if we look at the components of it, and we compare encumbrances versus non-encumbrances and look at the distinction between the two, you can see that it's the encumbrances that are causing January to look very hot. If we pulled them out and looked at them two separate, the non-labor actuals are running at about 5% through January, which is modest. So my recommendation to this group is let's take a look at February and see if this 18% number moderates quite a bit by then. The next sheet, page 3, is overtime. And overtime in January was very high. And it's in 3 major categories. The categories are fire, M&O, and M&O should be no surprise to any of us. And also the third category is police. So through January, we're 7.7% through the labor year, but we are 15% spent for overtime. And what's interesting is, you know, I hear the assembly say, well, that's because you under budget for labor. However, if we look at our January spend and compare it to our 2023 actual overtime usage, it suggests that even if we had budgeted 2023 actual for 2024, we're still running hot. So it's an area where we need to focus some attention through the year. But again, we all know that January was a high snow month. And the last sheet is travel. And there's not much of a lot of interest on this sheet because we haven't done a lot of traveling in January. And we do not have an alcohol tax report this month.
Okay, thank you very much. I have a couple questions and then I will turn to members. Also note, some folks had to leave, so we are dwindling as far as membership, but still paying attention. One is on the overtime. This conversation, I remember back from being on the Budget Advisory Commission and the interplay between vacancies and overtime of existing staff. So I know this report doesn't show that, but I just want to note that's an ongoing conversation.
Yep.
And then I'm also curious because you mentioned fire and I also see police here in terms of overtime. And I guess I've never really understood because I feel like at least this administration under prior OMB directors as well has talked about fire overtime in a different way than police. So I just wonder, are those fundamentally different departments or is there a concern about fire overtime that is not present for police? And I'm not saying that because I don't support either department, but it's always surprising to me that we don't seem to treat the police overtime with the same level of concern as fire overtime. So I wonder if you can comment on that.
I would ask the ability to come back and provide some analysis next month, because I'd like to study that topic and maybe look at 5 years of historical overtime activity between fire and police, how it's occurred, how we've budgeted for it, look at several administrations in order to provide a knowledgeable answer to that question.
Yeah, and that's fair. I just mostly wanted to flag it for now because I think they should be treated, equitably or equally, whatever term you want to use. The other question I have, it's actually not on these actuals. Well, actually, I'll see if there's other members who have questions then, because I'll go to that other piece. Okay, and if you're on the phone and you have questions, please speak up. Okay, well, we can come back if there's other questions. My question is actually, so you had submitted, and I know this is not on our committee agenda today, but you had submitted the 2023 actuals it was basically on our agenda Tuesday. And this was something I had raised last month on alcohol tax. So I just want to raise it again. We can talk offline. But just to note, I'm looking at the alcohol tax from, this was item AIM 14-2024, item F3 on our agenda. And this was something I brought up last meeting. there's two items on the alcohol tax. They're both under police, program operations and mobile intervention team. I know what both of those are for. Basically, they're budgeted at a certain amount, and then both of them are over by, one is over by $90,000 and the other's over by $97,000. So I want to flag that going forward as well, because I'm concerned. I've never seen that in a prior year alcohol tax, because I've never seen an appropriation go over the budgeted amount. Part of that is because we haven't actually spent a lot of the money as it was intended, or it was reappropriated, or it just was underspent. So this is the first time that's happened. But I want to raise that because I disagree with the interpretation that we could charge above that amount in the alcohol tax, which is a dedicated tax for which we have specific appropriations.
So-
And just one more second,
okay.
thank you. And the reason I bring that up is because this is a dedicated fund. I totally understand that within departments, there is opportunity to move, or things can run hot, as you said. But the opportunity cost of having one department charge more is that it will take away funding for something that was already appropriated. So I wonder if you can just comment on that.
Okay, so I'm at a disadvantage because I don't know what you're looking at, but I have a feeling I might know what you're looking at. You may be looking at one of the other financial reports that's similar to this, except that it's the alcohol tax report.
Yeah,
For
thank you for
December?
2023. And I'll make
Okay.
sure it's distributed and we
Oh.
can put it up on the website, but it was just an informational report.
And further, you're looking at a row that shows that one of the projects in alcohol tax spent more than was appropriated.
Yeah, there were two of them. One is the mobile intervention team. The other was police program operations, which I believe it's in evidence tech. There's a specific set of things that it's attached to.
So conceptually, that shouldn't happen because the system shouldn't allow the overspend without some maneuvering. There are exceptions to that. One, of course, which is payroll, because you have to pay people their pay. And so there are overrides that allow certain things to be processed without an appropriation before they occur, payroll being one. So what I'd like would be the ability to determine if perhaps what we're looking at is a payroll-based transaction that caused the appropriation to, that caused the expenditure to exceed the appropriation. I need to do a little bit of research to determine what those overages were.
Okay, yeah, thank
Okay.
you. Mostly I just wanted to call attention to it, again, because I do see alcohol tax should be treated differently than general fund to some extent. And yeah, I recognize that you're at a disadvantage. That was not my intent. I just
Okay,
didn't get to
yeah.
send it out. But that
Okay.
is something I just want to pay attention to, and maybe next month we could return to that when we look
Okay,
at actuals.
Absolutely, okay.
Yeah, thank you. And also just to note, I'm going to send to Jennifer the files. They were at our February 13th meeting already submitted, but I'll make sure that we get those on the committee page as well. Thank you. Any other questions on budget actuals? Okay, well, thank you very much. Then let's move on to Mr. Cipriano. We have our MOA financial status.
Thank you, Madam Chair. I'm looking at the revenue summary highlights report. I'm at the very top, which we call our dashboard, and I'm going to review some highlights now that we are pretty much done with 2003. We had total budgeted revenues projected to be 809 million. And all the categories you see in these 20 columns, which are our most significant revenue streams, are in except for two. So as of February 12th, 2024, a year-to-date actual revenue posted in SAP is 804.83 million. The two areas that are not complete yet, you'd find one on page 3, that would be room tax. That is a quarterly reported revenue stream. We are not fully done with the SAP postings of all the revenue that comes from our Harris Govern system, but to date, we show 37.6 million. And best guess, as we look at and compare Harris Govern to SAP, is that number will be around 39 to 40 million for the year. That's our best guess. Now, we had a very robust summer and good third quarter. We're seeing some pronounced slowing here toward the end of the year in hotel revenue and also for January. So we'll be reflecting that in our 2024 first year budget revisions. But 22 and 23 will be record years, I think, when we're finally finished. Another area that isn't complete yet would be the municipal assistance payment we received from the state that appears on page 4. It's budgeted now for almost $500,000, 406,000. There's some paperwork, I think, and some figures we have to finish up and get them to the state that comes from the Alaska Municipal League and the Department of Commerce. And so we expect to see that kind of wrapped up pretty quickly. But again, we're currently at 804. Best guess, best estimate, we'll probably finish somewhere around 807 million for the year. That's Treasury's best estimate right now. Just really briefly to highlight the report, positive surprises this year were personal property, which appears on page 2. That was up almost 4 million over what we had budgeted. Again, I mentioned hotel. Cash earnings on page 2, you'll see, is about 1.1 million above what we had originally estimated. Cash pool earnings are dependent on where interest rate levels are. When we take out TANs, we're borrowing money at a very advantageous rate, and then we turn around and put that into our cash pool. We're allowed to do that as long as we spend all that income during the year, which we do. So that was a surprise due to interest rate levels where they are. And then building safety came in at 1.5 million above what we had projected. Negative surprises were tobacco, motor fuel excise tax, marijuana, and alcohol. All of them were somewhere around 1 to 2 million under what we had projected. That's a kind of a warning signal to us. Though, as you'll note, all those are retail kind of cash flow derived. So that tells us that the economy was a little bit weaker, than we had anticipated early in the year, and we will carry that over to our 2024 first quarter budget reevaluation. We're seeing now in 2024, just as an overall view, a flat to lower general Anchorage community GD, let's call it level of economic activity. We're going to be buoyed a little bit by modest growth in travel revenues. Most forecasts are for 2, 3, 4% increase over what we saw for like hotel revenue in 2023. But our feeling is that will be a reflection of what's happened with inflation. So in other words, we don't know if we're going to see increased traffic, or is it that just the inflationary cost of doing business for hotels filtering through the system. And we also have some increased activity up on the slope, which the municipality should benefit from. But if I was to categorize, I would say you'll see us be flat to slightly lower for a projection for these revenues in 2024. So I'd be happy to take any questions.
Yeah, thank you. Any questions from members? Oh, go ahead, Mr. Presvidia.
I'm going to see if I can figure out how to formulate this question. So I think that my question is in the predictions that were made over the last couple of years in terms of the expected revenue, knowing that we were in a strange time, and the pros and cons of under prediction versus over prediction. There was certainly a lot of debate about whether the predictions were accurate or not, and that was what we budget on, right? So I'm again, I don't want to go too much into the philosophical. I'll save that for a different meeting. But I am particularly interested in the impact on the city for under prediction, and then the pleasant surprise that happens when it's more than we thought. I guess what I'm wanting to know is the process that we use to actually determine that. And I don't expect you to explain that to me today, but I guess want to put on the record that I'm concerned that there was an under prediction that impacted our ability to budget sufficiently, and now we're seeing that there was more than we thought. But there was a lot of conversation during the period of time of developing this budget last year, where there was a strong belief that we were where we are. So that's just something I wanted to just put on the record, that I think moving forward, I'm hoping that we can get closer to predicting accurately so that we can develop a budget that actually utilizes all of our funds.
My response to that would be, this is a difficult and economic environment, as I'm sure you're aware. There's two parts to Treasury's budget process. One is purely a technical process where we'll look at the stream of revenue and we'll just apply business statistics to it, like standard deviation, things like that. The second part, and the most difficult part, is the fundamental analysis. We're saying, where are interest rates going to be, 6 months from now? We have geopolitical events that no one can kind of put some numbers around. Very hard to quantify those things. So it's a very complicated and multifaceted analysis. And these days, fundamental aspects of that exercise are much more important than technical. If we can just look at business statistics, we should be able to always come in within one standard deviation. That's the reason you use business statistics, but it's because of the fundamental factors that really adds that variability that I believe you're discussing.
Yeah, I appreciate that. I think that the one factor that you didn't include is political, and I think that that plays itself into it. There's a perception that those that predict higher are overspending, and those that predict lower are being conservative. And not to say that one is right or wrong, but those certainly have played into the calculation as well. And so. Anyway, I'm happy that this turned out the way that it did, and I think it's good for the city. But the concern I have is when we underpredict and then we underserve because of that, and that the services that this city vitally needs are not given because we have predicted incorrectly. So thanks.
Okay, other questions? Okay. Yeah, and I'll just note that I do have some concern kind of looking forward, separate from Mr. Perez-Vidia's concerns, just looking at some of the underperformance of these, but I understand, there's a lot of factors there. One I'll just note is the alcohol tax being 1.5 million under. I guess, I think you covered this earlier, but are there outstanding receipts? Like, would these numbers change in the next month significantly? I see room tax still needs to post.
Right.
I just wonder, because I know there is a lag. So do you have any kind of rough guesstimate, not dollar, but kind of how much we might see, how much change we might see?
Based on the two categories that aren't complete yet, municipal assistance and hotel revenue, I'm thinking, we ran these numbers this morning, maybe 2.3 million in additional revenue you may see added to 2023. So that would put us somewhere around 807 million. That would be our best estimate. And again, it's only those two areas that aren't complete as of yet.
So I think what your question was on alcohol tax is not going to change.
Yes, alcohol tax
Alcohol
is not
tax
going
is
to change.
done and
Yes.
locked in. So it did come in less than was budgeted for whatever alcohol related reasons. All the charges are, all the revenues are accounted for 2023 for alcohol tax.
I know we're running up on time. Just really briefly, yeah, I think it's a good thing that we did not budget all the way to the top of the alcohol tax back in November. To my knowledge, there was some left over there. That's something we'll take up in first quarter budget revisions. My one specific question on municipal assistance. So this is for 2022, just to verify, because I want to make sure. I know there's discussion right now. There was a veto of municipal assistance for 23, I believe, or for the FY24 budget, but 23. So is this money that we have reasonable certainty that we will get when we finish our financials?
I can't speak to the political process, but the numbers that we submit are based on activity year-end 2022. I don't know what the formulas are. I'd be happy to research into those, but the first step is give your year-end figures for 2022, and then how that gets parsed out and through these various departments, I would have to do further research on.
But I think the 400,000 or whatever is the amount that they're looking for getting, which was a 22 based amount.
Okay, thank you. Okay, and I know we're right up on time. Just double checking in case there's any invisible members of the public in the room who would like to provide audience participation or on the phone. Okay, then I will not propose that we extend the meeting. So thank you, everybody, for being here. Our next meeting will be March 21st, and I will go ahead and adjourn the meeting. Thank you.